Good afternoon, everyone. Uh, I welcome you all to this educational webinar series. In our last webinar, we had discussed about commodities, the basics of commodities, and how one can trade in commodities. What are the benefits? What are the advantages? And what one has to look at when trading in commodities. So this in this webinar, we thought of sharing some insights on what are the different tools for trading commodities. It is, I would say, it is very much similar to what tools we use for other asset classes like equities or for bonds or any other asset class. The major tools are the same. The only thing is the ingredient of that tool differs. So, say for example, the fundamental analysis, technical analysis, quantitative analysis. So, in fundamental analysis, it will be slightly the fundamentals that you have to look at when you trade in commodities that might differ, but fundamental analysis is there, which is one of the important tools. Then we have technical analysis. So technical analysis, again, it is the same for any asset class, but the only difference is the underlying changes. So in equities, you might look at the stocks. In commodities, you might look at different commodities like gold and silver. So the studies are almost the same. Of some studies might change for some of the commodities. So some studies might work for some commodities, some studies might work for some stocks. So it depends how you are comfortable with that technical analysis tool for trading commodities. So this comes by experience. So I'll be just sharing the basics today, and what exactly you have to look at when you trade commodities. Apart from that, I'll be also sharing a few other tools which can be used while trading in commodities. Let's start with the presentation, and I'll be taking the question answers after the webinar is over. So we'll just understand first what tools are there for trading commodities and how one can use those tools. So as I mentioned, there are broadly three tools. One is the fundamental analysis, then we have technical analysis, and a third we have quantitative analysis, which has been trending nowadays. But I won't be covering quantitative analysis because quantitative analysis in itself needs one separate webinar wherein you can discuss different types of quantitative analysis that can be done on any kind of markets. So this webinar will be restricted only to fundamental and technical analysis, and in that we can look at different types of trades that can be taken, considering different facets of the market. So let's start with the fundamental analysis. In our last webinar, I had mentioned about fundamental analysis in brief. And I'll just touch upon in this webinar also, because these are very important aspects to know when you trade commodities. So in fundamental analysis, if you compare it to equities, in equities, you what you do is you do industry analysis, you do company analysis, you read the balance sheet, you read the profit and loss statement, and then you take a cue on how the company is, and how the industry is performing in which the company is operating, and then you take a call on whether to buy that stock or not. But in case of commodities, it is different. In commodities, you have to understand the entire aspects of global economy. What are the macros that are impacting the global economy, and that in turn impacts commodity, because commodity is like analyzing commodity market is huge, and it is not that easy to understand the dynamics of commodity. Yes, on one side there are demand and supply that impacts any commodity. So if the demand is more, supply is less, then the market, that commodity might go higher and vice versa. But I think in the recent scenario, it is not only the demand and supply that matters in case of commodity prices, but there are other aspects also, like the geopolitical tensions. You might be hearing recently, Russia Ukraine, since last 1 month the war is going on, and how it is impacting commodity prices. We have seen commodity prices testing lifetime highs. Now, this is mainly because of the worries that because of the geopolitical tensions, there are talks of World War III being seen, and because of that, because of the supply tightness, the prices are going higher. So all these factors are very, very important when you track commodities. So recent being the geopolitical tensions, but otherwise, even the political scenario in any economy, like in the US, because commodities are denominated mainly in US dollars. So anything that happens in US directly impacts commodity prices. So any political issues, or any monetary policy changes in the US, or for that matter in other bigger economies like China, if there is any major change in Chinese economy, that might impact base metal prices. So all these factors one has to keep in mind when trading commodities. And these factors, they are, I would say, the geopolitical tensions and other factors are slightly short term in nature, but in long term, what remains is the demand and supply. So because of this fundamental changes, what impact it will have on the demand and supply, and according to that the price moves. But these are basically long term in nature. So for somebody, if somebody wants to do a day trading, he cannot do a fundamental analysis and trading commodities. So fundamental analysis is mainly if somebody wants to take a longer term view. Say for example, if somebody wants to trade in gold and want to take a long term view in gold, so one has to understand how gold is performing, what are the factors that are impacting gold, is those factors are short term or long term in nature, and then one has to take a trade. So these are some of the factors that needs to be that one has to consider while trading commodities. So these are the factors which I spoke about. Global economic indicators, like as I mentioned, the economic changes impacts commodity price, especially US, bigger economies like US, China, European Union, etc. Global forex movement, the any change in the major currencies like the dollar index or the euro, yen, these also impact commodities. Fundamental factors are there, like the demand and supply. Policy decisions, as I mentioned, any monetary policy decisions or from the Fed or from other central bankers like the ECB, Bank of England. These also has bearing on the commodity prices. Then we have inventories and stocks. So especially in case of crude oil, we have seen prices again hitting $100 per barrel. Now this is mainly because the inventories are low, supply tightness is there, and geopolitical tensions are on. So there is an expectation that going ahead, the supply might tighten further, demand might be better, and because of that the prices have went up. But now again, because of the virus situation in China, there is a lockdown there, and there might be a demand destruction, and that's why we have seen crude oil prices slightly coming lower. So these are all demand and supply dynamics one has to consider while trading commodities. Political scenario, as I mentioned, any political change in bigger economies impact the commodity prices. And then we have seasonal factor. Seasonal factor is like every commodity has a cycle. For example, in case of agricultural commodities, there is a crop cycle. Whenever the new crop comes, arrivals come, the prices come down because of the supply. But if the arrivals are low, if the crop is low, then the price might go up. So all these factors need to be taken care of when one trades in commodities. So coming to specifics of commodity, like specific fundamental factors for specific um, complex. First, we'll take a bullion, because gold is one of the commodity which everybody understands. And in case of bullion, if you look at, there are a few important economic indicators like the inflation. We are hearing recently about the inflationary environment, which is actually creating havoc. If you see in US, it is the inflation is at around 30-year high, and Fed has already started tightening, and they have increased the interest rates in their last meeting, and they are expected to increase the interest rates, say almost 5 to 6 times this year. This is just to cool the inflation. Now, because of the higher inflation, we see gold prices moving higher, because gold is considered as a good hedge against inflation, and that's why we have seen prices going higher. If you look at gold prices in the recent times, it has moved higher from around $1,800 to 2070 $75, again came back to $1,900, and now it is around 1950 $1960. In case of MCX, like in the Indian markets, if you look at gold, it had come down till 45,000 in 2021, but now again it is back to 52. It almost tested 56,000, which was the earlier highs, and now it is trading close to 52,000. So this inflation figures becomes very, very important to be tracked for understanding how the prices will move. Then currency, as you must be seeing, because of the inflationary worries, and because the Fed is increasing the interest rates, it is benefiting US dollar, and US dollar has moved up against other currencies, because US dollar is considered as a safe currency, and in times of such uncertainties, money flows into US dollar, and that's why US dollar index is trading close to 100 levels now. That also impacts commodities, because it has a negative correlation with gold and other commodities, because commodities denominated in dollar become expensive when there is a change, expensive, or it becomes cheap when the price of dollar index moves up or down. So that has a bearing on commodity prices. Economic scenario, as I mentioned, the different economic indicators one has to look at while trading a bullion, like non-farm payrolls data, unemployment data, ISM manufacturing, FOMC meeting, US GDP data, US consumer confidence data. So all these economic indicators, which is released either on a monthly basis or on a weekly basis, or say on a quarterly basis. Now these data are very, very important when you trade in commodities, because these have major impacts on the commodity prices. Especially what happens is, because of the economic data, there is a direct relation with the US dollar, and because of that the commodity gets impacted. So these data becomes very, very important while trading in commodities. Fed policy decision, as I mentioned, Fed has started increasing interest rates, and that has impacted gold slightly. If you look at gold prices, it had gone up till 56,000 on in the Indian markets, and now it is close to 52,000. Now the only factor that is not allowing gold price to go higher is the Fed is going on is it is going to increase the interest rates more this year to control inflation, and that is what is pressurizing gold prices. So this is how you have to look at when you trade gold. Yields, again, it is again directly related to the Fed policies, how the currency is moving, what are the inflation figures and all. So that also has a good bearing on the bullion prices. So these are the fundamental factors one has to consider while trading in bullion. Uh, when um, when somebody trades in energy, he or she has to look at again the demand supply dynamics, which is very, very important in case of crude. There are different inventory report. There are different monthly reports being released by different oil agencies, which becomes very, very handy when you trade crude oil. But when there is a lot of geopolitical tensions, which is currently the case, these reports doesn't matter much, because it is more of a sentiment driven market, and that is what we are seeing in crude oil currently. Currency US dollar, again, is now currency has an impact on all the commodities, because as I mentioned, whenever there is a movement in a dollar upside or downside, that impacts commodities as well, because they are denominated in commodities. They are denominated in dollar, and US economic scenario. Now, if the US economy is doing well, then people will spend more. People will um, go for drives, and the demand for oil will increase, and that is how the prices move up because of the better demand. But on the other side, if the economic scenario is not that great, then people won't spend more, and that has a negative bearing on crude oil prices. So US economic scenario mainly is very, very important while tracking crude prices. OPEC policies. OPEC is the oil cartel which comes out with they conduct regular meetings, and if there is any imbalance um in the demand and supply, they take proper measures so that the prices stay in a balance. And that's why OPEC policies are very, very important while you trade energy markets. You have to keep a close eye on the OPEC policies. This was for specific for crude oil. If we talk about natural gas, in case of natural gas, the weather is very, very important. It plays a pivotal role, the US weather. So whenever we see above normal or below normal weather forecast in the US, that has a great impact on natural gas prices. Plus, we also have inventory data every Thursday, which has to be looked at. And if you see the inventories are continuously declining, then we might see up move in prices. On the other hand, if the inventories are continuously increasing, that shows that the demand is weak, and the price of natural gas might go down. So this is how you have to track the energy sector on the fundamental front. Similarly, in case of base metals, again, base metal is a economically sensitive commodity. So whatever impacts accrued in case of economic indicators, in case of currency, impacts economic scenario, impacts base metals as well. Other than that, infrastructure developments in the major economies have a bearing on base metal prices because that impacts the demand. In case of base metal, China is one of the major consumers of base metals, and any economic change in China impacts commodity prices. Any kind of measures taken by China impact commodity base metal prices. Even developments in automobile sector also has a great bearing on the base metal pack. So these are important fundamental factors one has to take care of when one trades in overall commodities. And for checking this data, one can either visit the forexfactory.com or investing.com, wherein the datas are released when they arrive, and based on that, one can take informed decision. So these are some of the examples of how the fundamental news impacts. Now, in case of gold, in the first box, if you see, the yellowish line is gold and the other is silver. If you see it, gold and silver normally moves together. So the same news impact has the same impact on both the commodity. So if you see at the start of this year, FOMC minutes signaled a quicker interest rate hike, and that boosted the treasury yields, and because of that, gold prices came down. Then again, gold prices moved up in mid-January because of because of the higher inflation numbers, which jumped to almost 7%, and you can see how gold performed well after that. And then again it dropped somewhere in the end of June. Now this is only for I have taken only for January month. If you see at the end, the price again slipped. Why? Because US dollar was trading higher. Again, because Fed was expected to increase the interest rates a bit aggressively to control inflation. So this is how the news has an impact on the prices. Coming to the right side, copper and nickel. Here also, if you see in say the second week of January, the SHFE copper inventories were at 29,000 metric ton, nearly a decade low. So when the inventories are low, that shows that the demand is there. People are using more and more of copper, and that's why the prices went up. Similarly, in case of nickel, if you see the again in nickel also the global inventories were at multi-year low, and that's why the prices moved up after 19th Jan. And later in the month, if you see, because of the dollar index, now the same impact this had on on bullions also. And if you see, the base metal price were also going down because of the one common factor, and that is US dollar. If you see, US dollar index rallied because of the Fed signaling aggressive rate hikes, and that impacted copper as well, and copper came down after this news. If you look at energies, in case of crude, the fall in output in the second week of Jan, the fall in output as cold weather freezes some production wells in Texas. Now this is for natural gas, and because of the cold weather forecast, there was a spike in natural gas prices. And in case of crude, if you see, tensions escalate in the Middle East after a drone attack on oil facilities in the UAE. Now, because this is again sentiment driven. Now, because of the attack, expectation was that the supply might get stopped for a short term, and that's why the prices went up. Again, in later in January, if you see, tight supplies amid concerns over a possible military conflict in Ukraine. Again, the geopolitical tensions were creeping higher, and that's why we saw crude prices moving up. So this is how the fundamental news has an impact on the prices. Sometimes they may be short term because of the short term nature of the fundamental news, and sometimes it can be long term because of the demand supply scenario. Excuse me. So these are the different exchanges that one has to look at when trading commodities. In case of COMEX, in case of gold, silver, copper, one has to look at COMEX. Crude oil, natural gas, NYMEX is the benchmark exchange. Copper, zinc, lead, nickel, aluminum are traded on London Metal Exchange. Edible oils like soybean, soy oil, soy meal are traded on CBOT. Cotton is on ICE, and Bursa Malaysia uh, in case of crude palm oil, we track Bursa Malaysia. Now, these were the fundamental factors, fundamental news that impacts commodities, and one has to track this very, very closely while trading commodities. But only fundamental factors are not enough. Fundamental news are not enough because, as I mentioned, fundamentals are normally for medium to long term perspective. But if one has to day trade, and if one has to do a momentum trading, he or she has to understand technical analysis. Now, this is the second tool that one can use for trading commodities. Now, at the start, I mentioned that these are all same for almost all asset classes. But there might, like, once you start trading in commodities, once you start trading in equities, you will come to know which indicator is best suited for gold, which indicator is best suited for, say, a stock, which is good for base metals. So that comes with practice. So I think initially one has to understand how technical analysis can help from a broader perspective, and then once someone starts trading with the experience, he or she can tweak the rules of trading as per the commodity, as per the suitability. So in technical analysis, I'll be like, technical analysis again is very, very vast subject. I'll be just taking you through the different tools in technical analysis, which I normally follow, and I track them regularly for taking a view on any market. So I'll be sharing only those. So this doesn't mean that technical analysis considers it has only this much of tools. It has vast tools, but I'll be taking only a limited number which I normally track. Uh, the first thing that I track is chart pattern. So if you now, this can be tracked on any time scale. You can look at it at 5-minute chart, or you can You can track this on 15-minute chart, 4-hour chart, or you can go in for a daily chart. Now it depends what is your goal, whether you are trading for say a medium term, or you're trading for say a very short term, or you're trading intraday. So if you're trading say from a short term perspective, you have to look at weekly chart or monthly chart. If you are trading from a weekly perspective, you have to look at daily charts. And if you are trading from say a daily perspective, then you have to look at 4-hour chart. And further lower, if you are trading for say a few hours, you can look at 15 minutes or 5-minute chart. So these patterns can come in any time frame. So time frame doesn't matter. It only the time frame matters depending on what is your goal of trading, whether it is short term or day trading. So in case of chart pattern, you can see on the screen, it's an inverse head and shoulder. In case of silver, you can just see how after the inverse head and shoulder pattern, the prices moved sharply higher. You can see the prices once it broke the neckline resistance. Now this was the neckline resistance, and from here, if you see, the target was somewhere near 25.23, and it came close to $25. After that, it tested this target. So this is how chart pattern helps in tracking the commodity price, and it basically it acts as a leading indicator. So there was no news why silver went up, but then once it started moving higher, when it came here, there might be some news. Now once the news comes, if you trade, you might miss on a big move, because it started from here, so your risk reward won't match. So technical analysis, the best part is that it is a leading indicator, and it will in advance, it will tell you when the prices are going to shoot up, and the news will follow. Now this is another example. This is crude oil futures. If you see, again there was an inverse head and shoulder pattern being formed on the chart, and once the neckline penetrated, the prices went up, and it sharply it went up from almost 5,160. It tested 6,300 levels. The target was, as per the HNS, it was 5,730. It tested that, and then it went higher. So this is what is called a chart pattern. So this is just the inverse head and shoulder that I have shown, but there are different patterns like cup and handle, wedge breakout, breakdown. Then we have triangle breakout. So there are a lot of different chart patterns that one can go through. I cannot cover the entire chart patterns in this short webinar, but you guys can go through different books, wherein you will come to know what different chart patterns one can look at while trading. And these chart patterns are, I would say, they are high conviction chart patterns, and normally, say I would say 80 to 85% times the probability is very very high. There are chance that it might fail also, because again technical analysis is not a perfect science. So there is a chance it might fail. So stop loss is a must. Without stop loss, one should not trade in any kind of market. But the probability of these chart patterns are very very high, and one can develop good conviction trades with this chart patterns. Then comes candlestick pattern. Now candlestick patterns are very good for identifying entries. The disadvantage of candlestick pattern is that it doesn't give you a exit level, but for exit level you can look at other tools also. Now if you look at the screen, it's a dark cloud cover pattern. Now this is a double candlestick pattern, wherein the previous candle is a big bullish candle, and then a bearish candle which crosses the high of the previous candle, and then it closes at least at the midpoint of the previous bullish candle. Uh, a close below the pattern would give you a confirmation, and after that you can see how the prices have moved lower. Now, as I mentioned, in candlestick pattern, it will not give you a target, but you can set target as per different other tools. Like here, if you see, there was a rising window support near 283. So you can, like, pattern low is 306.15. So once it penetrates 306.15, you can take a target of 283 for your trade. This is zinc future, so even 283 from 306 is almost 20 to 22 rupees, which is pretty decent, because one lot is of 5,000. So 22 points, 20 to 23 points is a decent profit in natural gas prices, in zinc. So this is how candlestick pattern helps. Now this is a second pattern. This is a bullish engulfing. If you see how the prices took support at the double bottom, which is around 60, 61, 62 levels. And from there, if you see here, a bullish engulfing pattern was formed. And once it was confirmed above 65, you can see how the prices went up. Here again, there was another confirmation of a trend line breakout, and you can just see how the prices went up till $83. So it was almost a $20 move from the breakout, and you can just see what was the stop loss. Stop loss was just 61, which is the low of this pattern, 61.74. So almost three to $4 stop loss, and you can see the kind of up move it has given. So if you there is a saying that you have to ride the profits and you have to cut down your losses in technical analysis. So if somebody would have taken this opportunity of writing this profit, then he or she would have made a decent profit, because the best thing to do is keep trailing your stop losses when you are in profit, as per the support and resistances. So that helps in accumulating more profits in such kind of trade. Now this brings me to the support and resistance. So support and resistance are again very, very important, because um, uh, uh, support and resistance can be used in two different types. One is, you can use support and resistance for breakout breakdown trades, and another benefit of support and resistance is it will help you to exit your trade. So as I mentioned here, um, in this candlestick pattern, there was a rising window support of 283. So it gives you an indication that here the prices might take support and it might move higher. Here also, if you see, there was a double bottom. So this was the earlier support where the prices made a low and moved higher. The same level it came here, and from here also it moved up. So this has become a double bottom support. So this is how support and resistances also help in exiting your trade. So here, if you see, there is a channel being created with a resistance at these level, which is around 764, 765, and support near 686. So you can see how many times it came. It was trading in this zone. It came to 686 almost uh, 4 times, and on the upside the resistance was tested 2 times. So once this resistance broke, it went up to test the other resistance. So this was the double top resistance. So here again, it took the resistance and the prices came down, but here again it has taken the support. So this is how it helps it helps in taking a breakout trade, as well as in getting the exit in any trade that you have taken as per other indicators. Now this is trend line breakout breakdown. Now this is my favorite tool, because the probability is very, very high in case of trend line breakout or breakdown. Now this is a breakout example. If you see here, the support, double bottom support was taken, and then if you draw a falling trend line, it was a very good trade, that if it breaks this trend line, the market might move higher, and that happened. It broke this trend line, and the prices went up to test the 252-day MA, and it went even further higher above that. The risk reward was better, because the stop loss was not much big, and once we got the breakout, then you can also trail the stop loss and you can take it further higher. So this is how a trend line helps in taking a trade. Now this is a recent example of silver. Now this will cover everything. If you see, there was a multiple resistance here. Once the resistance broke out, the price went up. It again took resistance at these level. If you see, the high which were registered earlier in 2020, in 2021, the price came close to that level, and then we saw a throwback to the support levels again, and from the support level again the price moved up. So this is how support, resistance, trend lines, and different indicators helps one in trading a more in a more informed way. Otherwise what will happen is it will be more of a speculation that we are doing. But when you study, do a proper study, and then you trade, then it becomes a I would say a more of a high probability trade rather than just trading haywire. Now this is another way of trading. This is a spread trading wherein you trade in two different commodities. So this can be a mean reversion trading, or this can be based on seasonal factors. So the example that I've taken is zinc and aluminum. So zinc and aluminum are normally 85 to 90% correlated. So they normally move together, or like if they move up, they will move up together. If they move down, they will move down together. But there are instances where one particular news impacts only one commodity. That is, say for example, the current geopolitical tension is having a good impact on aluminum prices, but not much impact on zinc prices. So you will see how aluminum prices moves up, zinc doesn't move up. But at some point of time they have to again come back to the mean, and that is where the opportunity lies. So even the spread trading can be done using technical analysis. So if you see here, now this is a spread chart of zinc minus aluminum, and if you see how it is trading in this triangle. This is a recent chart, how this is trading in a triangle, and you can see here, using different tools of technical analysis, you can also take a trade in a spread. Now if you see here, there is a bullish engulfing being formed, and how the spread moved higher. So you have to take a you have to buy the spread here at this bullish engulfing, and it went up. It came close to this resistance, and then there was a negative formation, negative candle formation, and the prices. So here you can book your profits because this is the resistance zone. It again came to this trend line support, and it there was a piercing kind of a formation here, a piercing candle, and it again went up. This time it went above the resistance, but there was another resistance here. It took this resistance, it again came down, and again it took this trend line support, again it went up. So this is how you can take the benefit of technical analysis while trading spread also. If you look at RSI is trading at resistance. Here it came down, here again it came to the resistance. So this also indicates that the prices might move down. It came down here also, the prices went above the overbought zone, and then it came down. So I just want to show that spread trading, like there is one perception that spread trading can be done only based on the fundamentals, but technical analysis also can be used very well to take the spread bets. And because technical analysis will give you a very good entry exit point when you trade spreads, which is not possible in case of fundamentally. It will give you give you a direction, but entry and exit can be taken from a technical analysis, and that becomes a very handy tool. Now this is the second example, this lead and aluminum. Here also, if you see, there was a dark cloud formation at the top. Prices came down, again a bearish engulfing was formed, the prices came down, then there was a consolidation. If you see, there was a triangle consolidation, a breakdown, then again a bullish engulfing formation, then the prices took resistance at these breakdown levels. It came down again a bullish engulfing, again it took resistance here, again it came down. So this is how you can use technical analysis for trading different pairs also, because pair trading, a lot of traders or a lot of new people who are coming into trading, they don't know how to trade. So with technical analysis, it becomes much easier because you're using the same concept of technical analysis even for spread trading. So you don't have to change anything. The only thing is the underlying will change. That's it. But the concepts and other things will remain the same. This is another concept which I like, pivot trading. This is actually very simple, but this is, I would say, sometimes it gives you a perfect direction in trading, especially in day trading. So here, if you see, I've marked a few points. Now, if the blue line is the pivot line, the green lines are the resistances, and the red lines are the supports. So if we take 3-4 days, now the shaded portion, like the rectangles that I've drawn, those are for that particular day. If you see from here, on the 21st, the price were trading above the pivot, and it continued to trade above the pivot on 22nd also. But once the pivot point was broken, the price came down, and then the pivot became the resistance. If you see here, it came to the pivot, and then again it fell. So until it was above pivot, the price were trading higher. So until it is above pivot, you can go for a buy. Below pivot, it is again a sell. And here, if you see, it finally penetrated the pivot, and then it rallied. If you see here also, it was above the pivot, and continuously it was trading higher. So this becomes your important support and resistances. So here the pivot was a support. Here it became the resistance, and once the resistance was broken, it again became the support. So even in case of pivot trading, it gives a good a good edge for day trading. And even the pivot trading, which is a very simple tool, you get the formulas on Google as well, how you can model it in Excel, and you can trade as per that, or on charts also. Like if you take any chart, any recognized chart, it will have a pivot indicator which will give you different. Now this is also this is a trading view chart, and in their chart, they have the pivot trading tool, wherein if you just put that pivot trading tool, you will get the support and resistance. So accordingly, you can trade as per the various indications that is given in the chart. So finally, the fundamental analysis and technical analysis, there is always a tussle, which one to go for. So let's look at the different pointers that both this tool have. Like in case of fundamental, it is for mainly for long-term investment. Technical analysis is for short-term as well as for long-term. I would not say only short-term, because sometimes you also get very good indications for a long-term trade. In case of fundamental analysis, it uses past, present, and future predicted data. Whereas in case of technical analysis, it only uses the historical data, and on the basis of that, we can predict what can be the future. Fundamental analysis is useful in determining undervalued or overvalued commodities, because as I mentioned, these are long-term factors, and based on that, you can come to know whether the commodity is underpriced or overpriced. In case of technical analysis, it is very useful in determining entry and exit points, like candlestick charts, candlestick patterns, or chart patterns, or for that matter, support and resistances. The trades taken on the basis of fundamental analysis might be held for 15 days to 1 month or even longer. But trades taken as per technical analysis can be as short as 1 minute. Fundamental analysis is a lagging indicator, because once the price moves, the news flows in. But in case of technical analysis, it is a leading indicator, because it gives you I would say it in advance. It tells you that now there can be a breakout or there can be a breakdown, depending on what kind of charts, what kind of tools you use on the charts. So it becomes a leading indicator, and which is very helpful. So this brings us to a point wherein one has to decide whether he has to go for fundamental analysis or technical analysis. And our answer to this is that one has to go for a combination of both, because as per us, commodity fundamentals as well as technical analysis are important. Like sometimes fundamental analysis comes very handy, and the technical analysis might fail, and sometimes it might be vice versa. So one has to have a good understanding of the fundamental analysis as well. But while taking the trade, one can use the technical tools, technical charts, to take a trade. But one has to understand the fundamentals as well, and should keep a close track on different fundamentals while trading commodities, or for that matter, any asset class. So this is what we wanted to share with you guys. If you trade equities, you might feel that this is same as what we do in equities also. Yes, it is same, but fundamental factors are different as compared to equities. But technicals, I would say, are almost the same, because the tools are the same. The only thing is the underlying changes. But once one gets used to it, he or she can tweak the technical analysis indicators for different commodities based on the suitability, and accordingly he or she can trade. So I hope this gave you some insights on how one can trade commodities in an informed way, using different fundamental and technical tools for trading commodities. Thanks. I'll be taking a few of the questions that I have received. Huh. There is a question, I want to know how to trade. So my advice would be, you have to first understand which commodity you want to trade in, and you have to understand the fundamental factors, as I mentioned in my start of the presentation. Then you have to also study some of the technical parameters, and then you have to do a, I would suggest you first do a book trade. You should not trade with the real money. There are different chart providers who allow you to trade on virtual money, and you can just test on that. And then once you are comfortable with how to trade, how to use different risk management, money management principles while trading, then you can trade with the real money. Before that, I think you should take some knowledge, and you should do some book trade with virtual money. What is the minimum amount that can be invested in this kind of investment? It depends. For every commodity, the different, there are, now this is a derivative product commodity. There is no cash product like what we have in equities. So here you have to pay margin, and the margin is different for different commodities depending on the volatility that is set by the exchange. How to start trading? You can just open a demat account. You can open a trading account, and you can start trading for commodities. As I mentioned, there are no cash products. We only have futures and options, and for that you have to trade in derivatives, and you have to keep a margin with the broker, and you can start trading. How to hedge steel in commodity with steel stock in equity? Well, here I would say this is not a hedge, but what you can do is you can just track steel in the commodity space. Steel is not that active in commodities, but you can also track other metals like copper, zinc, lead, aluminum, and on the basis of that, you can track those stocks in equities as well. Say, for example, if we are very bullish on copper, copper is going up because of the geopolitical tension, or aluminum for that matter, I think is the best example. So aluminum, we have seen a sharp move in the recent times, mainly because of the geopolitical tensions between Russia and Ukraine. And if you see those, because of the aluminum price have moved up, you can also see the impact on the aluminum stocks like National Aluminium or other aluminum stocks. So Hindalco. So I think all you can track a particular commodity, and on the basis of that you can trade in that commodity stock in the equity market. It will give you a decent I would say view about the stock. Where to see payoff charts of commodity, like we can see in Obstra, but not but only see, actually commodity options have recently started. There are not many vendors who will show you, who will give you the payoff chart. So I think slowly and steadily, once the option volumes picks up, we might see even commodities being commodity payoff charts being shared by different vendors. But as of now, the vendors are not providing commodity payoff charts. Crude can touch 300 per barrel. We are not giving any advice through this webinar. So you can just go through different analysis, different articles. You will understand where crude can go. So I'm sorry, I cannot comment on that. Which candlestick pattern is good for accuracy? There are a few candlestick pattern which are good, like for example, bullish engulfing, bearish engulfing is good. Evening star, morning star is highly reliable pattern. Then we have dark cloud cover, piercing pattern. Then there are other patterns also, like three black crows. But these are 5 6 patterns which are very convincing. Even tweezer tops and tweezer bottoms are accurate patterns. But as I mentioned, while trading candlestick pattern, you have to be very careful, because it will give you a entry, but for exit you have to rely on other indicators. So along with never go only with candlestick pattern. Take candlestick pattern as an entry tool, but for exiting you have to use other tools as well. Lot size for different commodities and fund required. Now it depends from commodity to commodity. Like for example, if you want to trade big gold, the fund required is close to 5 to 6 lakhs. That is 1 kg gold. If you want to trade in smaller gold, like gold mini or gold petal, you can even for gold petal, even 4 to 5 thousand rupees is enough. In case of mini, you can keep 60 to 70,000 rupees. Now, this depends on the margins. This margins might vary. Today, I'm telling you that it is 5 lakhs is 5 to 6 lakh is okay for trading big gold, but that might increase or that might decrease. So it depends on the margin that is set by the exchange. So for different commodities, a different lot size is required. And depending on that, you can take position in different commodities. How to put pivot point on chart? You can it depends on which charting tool you're using. If you are using say for example trading view, in trading view there are a lot of pivot point indicators. So you can select any one pivot point indicator and you can put it on the chart, or you can also model it in Excel. And because the formulas are freely available on Google, you can just model it, and you have to just punch in the open, high, low price, and you will get the pivot points and the support and resistances. Can I trade intraday in commodities? Yes, why not? You can trade intraday in commodities. And as I mentioned, you have to, when you trade intraday, you have to look at lower time frame charts like 5 minute or 15 minute, and then as per that you can take the entry, set your stop losses, and exit your trade. How to trade stock related to commodities? As I mentioned, you have to look at the commodity movement first, and then on the basis of that you can track those stocks. In chart we use Candlestick or Heikin-Ashi. You can use any, Candlestick is different and Heikin-Ashi is different. Both are different tools. So as per your comfort and as per your knowledge in these subjects, you can use any of those. Both have good probabilities. Well, I think I have answered almost all the relevant questions. I would thank, I would like to thank uh, every one of you who has joined and listened to this webinar. We'll be coming up with more of such webinars in the futures, educational webinars, and would request you all to participate in those webinars also the way you have participated in this webinar. Thank you all.